Good afternoon and a very warm welcome to all the participants joining us today. On behalf of the GST and Indirect Taxes Committee of the Institute of Chartered Accountants of India, I, Smita Mishra, Secretary to the committee. It is my pleasure to welcome you to this webinar on recent developments in indirect taxes. The indirect tax landscape, as we all know, continues to evolve rapidly with changes not only in law but also in administration and compliance expectations. It is in this backdrop that the committee has, designed the today's webinar. It has been thoughtfully designed to address some of the most pressing and practical issues which are being currently faced by the members, particularly in relation to filing of 9 and 9C. As we all know, certain additional sets of FAQs have been notified by the government. So it was decided to have a webinar, dedicated webinar, where these issues can be discussed. Also, the intimation risks which are arising from errors in annual returns and reconciliation reporting, and also the implications of the Central Excise Amendment Bill. This was also a recent development. So, through such knowledge sharing initiatives, the GST and Indirect Taxes Committee remains committed to equipping members with timely updates, practical clarity, and compliance oriented insights to help them navigate emerging risks and responsibilities with confidence. And I want to recognize the presence, the guidance of my chairman and vice chairman in their absentia for their guidance and support in carrying out all the various activities of the committee. Though they are not present here physically or virtually, but their support and guidance is there in all the activities of the committee, including this webinar. We are fortunate to have with us CA Pooja Mishra, who is the faculty of today's webinar. She brings with her rich experience and deep expertise in indirect taxation. CA Pooja Mishra specializes in GST advisory, litigation, and departmental representation across diverse sectors such as banking, healthcare, and manufacturing. I'm sure her practical perspectives and experience will add immense value to today's deliberations. And with these brief opening remarks, I request CA Pooja Mishra to please take the session forward. Over to you, ma'am.
Thank you so much, ma'am, for the introduction. So, the topics for today are FAQs for GSTR 9 and 9C, intimation risks stemming from GSTR 9 9C reporting errors, and the Central Excise Amendment Bill 2025. So, before starting the session, I would like to mention that the detailed session on GSTR 9 and 9C covering the applicability, due dates, overall framework, and table wise reporting has already been conducted and very well explained by Shri Sheikh Abdul Samad sir in the earlier session. So, therefore, I'll not be going deep into these aspects today. In this session, we will focus only on the practical aspects of GSTR 9 and 9C, specifically the relevant tables discussed in the latest FAQs for the financial year 24-25, and the discussion will be completely table wise, technical, and FAQ driven. So, with this background, let us now move to the presentation. So, my PPT is visible.
Yes, ma'am.
Okay.
Yes, ma'am, the PPT is visible.
Ma'am, it is not moving. Technical team, please. Okay. Okay, now it is enabled. So, first the question is why GSTR 9 and 9C are critical. So, first and foremost, GSTR 9 and 9C represents the final year of final return for the financial year. Whatever has been reported in the monthly returns, that is GSTR 1 and GSTR 3B, gets consolidated in GSTR 9. even though we file the returns on monthly basis, but the final figures are finalized in GSTR 9 only. So annual return, we can say that annual return is not an additional return, it is the final confirmation of everything filed before earlier. Now the second thing is, secondly, GSTR 9 and 9C forms the basis of scrutiny today. Whenever we go for audit, the officers start not with GSTR 1 and 3B. The starting point has become GSTR 9. The tables such as ITC reconciliation, turnover differences, and tax payable, it becomes the starting point for the audit. Now, the third point is that that GSTR 9 cannot be revised. Whatever we have filed in the monthly returns, such as GSTR 1 and 3B, that can be amended in the subsequent returns. But the GSTR 9, once filed, it cannot be amended or revised. And finally, the entire annual return mechanism is system driven now. Now the intimations also get auto populated, and they start from the system internally cross verifies the data which we have feed it in GSTR 9 and 9C, and then we get notices, system generated notices from GSTR 9 and 9C. So filing GSTR 9 and 9C is has become very critical now. Now the GSTIN issued FAQs on 17th of December. It has earlier also issued two FAQs. One was on 16th of October 2025, and another one was on 4th of December. So they issued the consolidated FAQs on 17th of December, in which in totality 33 questions were given. So we have divided the FAQs into two parts. First one is the general FAQs, and second one is the technical FAQs. So the we will first be covering the general FAQs, and then we will be moving towards the technical FAQs, wherein we will see firstly understand the tables, and then we will move to the FAQ part. So first one was, when does GSTR 9 gets enabled? So after filing GSTR 1 and 3B, all the returns of GSTR 1 and 3B must be filed, then only GSTR 9 gets enabled. Now the logic behind it is that in table 4, 5, 6, 8 and 9 of GSTR 9 gets auto populated from the figures which we have reported in GSTR 1 and 3B for the financial year. Suppose we are filing GSTR 9 for the financial year 24-25, then the figures of table 4, 5, 6, 8 and 9 will get auto populated from the figures which we have reported in GSTR 1 and 3B for the period April 2024 to March 2025. Now, from financial year 24-25, the supplies added or amended through GSTR 1A, they will also be considered along with GSTR 1 and IFF for the purpose of auto population. So when we are now when we are opening the GSTR 9, we get that whatever amendments we have done, that in the subsequent year or the same financial year, that also gets auto populated in these tables. Now, the third question was, does IMS have a direct impact on GSTR 9? So, it has been very beautifully answered in the FAQ that IMS does not have a direct impact on GSTR 9, but the table 8A of GSTR 9 gets auto populated from GSTR 2B, and GSTR 2B gets auto populated from whatever action we have taken in IMS, be it accepted or deemed accepted. If we have accepted or deemed accepted any invoice in IMS, then it gets auto populated in GSTR 2B, and then it will get auto populated in table 8A of GSTR 9. So we can say that it does not have a direct impact on GSTR-9, but it do have an impact on GSTR-9. Now, in previous year, we were having difficulty in filling the table 12 of GSTR-1. In filling the table 12 of GSTR-1, so this year the portal has provided us an additional facility by giving us an option to uh, to download the table 12 of GSTR-1 in Excel format. Now we can download the table, and it also has a uh, additional sheet wherein the same format which is for table number 17 of GSTR-9 that is given, and then we can use that data to fill the GSTR to fill the table 17 of GSTR-9. uh, Fourth question was that from financial year 2024-25 concessional rate of taxes of GST of 65%, it has got removed because it is not applicable currently. Now, one new thing is that previously we were having late fees only in GSTR-9. But from this year, from the current year 24-25, our return, if GSTR-9C is applicable on us, then our return will be considered to be complete return only when we have filed GSTR-9C. So, late fee would be applicable on GSTR-9 as well as GSTR-9C. So the mechanism for capturing the late fees is late fee will be applicable on the GSTR-9. It will be auto-populated in GSTR-9 when we are filing the GSTR-9 after the due date, and it will get auto-populated in GSTR-9C when we'll be filing the GSTR-9C. The dates for computing the late fees would be for GSTR-9 from due date till the date of filing of GSTR-9, and for 9C from the due date or the filing of GSTR-9, whichever is later, till the date of filing of GSTR-9C. So, two examples were also given in FAQs. Let's see the example wherein they have told us that how late fees would be computed. If GSTR-9 is furnished on 25th December, that is, it is filed before the due date, and 9C is furnished on 7th of January, then no fees will be is levied on GSTR-9 as it is furnished within the due date. However, late fees of 7 days will be auto-populated in GSTR-9C, because the reason behind is that GSTR-9 is filed before the due date, that is 31st of December, and so the late fees will be calculated only for the for 7 days. That is from the due date of filing of GSTR-9 till the actual date of filing of GSTR-9C. Now, second situation, GSTR-9 is furnished on 5th of January, that is after the due date, and 9C is furnished on 7th of January. Then total fees, late fees leviable is for 7 days, which will be auto-populated. For 5 days, it will be auto-populated at the time of filing of GSTR-9, and for remaining 2 days. Uh, as we can see that late fees will be calculated for 7 days only. For first 5 days, it will be auto calculated for GSTR-9, and for balance 2 days, it will be auto populated in GSTR-9C at the time of filing GSTR-9C. Now we get a lot of questions that my RCM, while reconciliation, when I was finalizing my balance sheet, I found that certain RCM transactions were missed, and I have not paid RCM on certain transactions. So the RCM transaction belongs to 2024-25, and now in September 25 I realized that I have missed to report liability and take ITC on these certain transactions. Now what shall we do? So a press release was released on 3rd of July 2019, wherein it was clarified. It was for the financial year 17-18, and it was in respect of financial year 17-18 and 18-19, but we can apply it here too. And FAQ has also referred this press release wherein it was stated that if the RCM is pertaining to financial year 17-18 and it has been paid in financial year 18-19 GSTR 3B, then this RCM liability as well as the ITC is to be shown in GSTR 9 of financial year 18-19, not in 17-18. So, for the financial year 24-25 also, we can see that if any liability which was missed to be reported in the GSTR 3B of 24-25, then we can pay it in GSTR 3B of 25-26 and take the due credit, and that liability will not be reported in GSTR 9 of 24-25. It will be reported in the GSTR 9 of 25 and 26. Now let's move on to the table wise analysis. So firstly, we will see at a glance that what tables are for which purposes. So table number 6, it is for ITC availed. It is the gross ITC which we have availed. In GSTR 3B, whatever ITC we have availed in table 4A, that ITC gets auto-populated in GSTR 6A, and we have to give bifurcation of that ITC. Now table 7 is for ITC reversals, whether it is a temporary reversal or permanent reversal or reversal on account of rule 37, 37A, rule 42, 43 or 17.5. Whatever reversal we have done in GSTR 3B, we have to show it in table number 7. Table number 8, it is the comparative statement of portal ITC with versus the ITC which we have availed in GSTR 3B. Now table 6 has the following tables. 6A is the total ITC as per GSTR 3B. It gets auto populated from GSTR 3B of table 4A. So it also contains the reclaimed ITC which we have reclaimed in GSTR 3B. Table number 6B, 6C and 6D. This is the classification of ITC into inputs, input goods and input services. Whether the ITC is on account of forward charge mechanism or on account of reverse charge mechanism, that ITC is to be classified in table 6B, 6C and 6D. 6E is the IGST availed on import of goods. This must reconcile with the bill of entry and ICE gate. 6F is the IGST on import of services. It must reconcile with foreign payments and RCM. Now 6G is the ISD credit. It must match with the ISD returns. 6H is the reclaimed reversals. The reclaims under rule 37, 37A and ITC reversed and reclaimed in financial year 24-25. 6K to M, these are the transitional credits availed through ITC 0102 form. Now we will get into table 6A. We get a lot of questions for we have to report the ITC which is pertaining to previous financial year, that is financial year 23-24. If we are filing annual return of financial year 24-25, then the ITC which is pertaining to financial year 23-24, that has to be reported in 6A1. 6A2, it is the total ITC minus the ITC pertaining to previous financial year. Then we will get the ITC for the current financial year, that is 24-25. Now we have to keep in mind some of the things, that any ITC pertaining to financial year 23-24 or any other preceding financial years which has been reclaimed during the current financial year, that is 24-25, on account of Rule 37 and Rule 37A. Rule 37 is ITC re-availment on of ITC reversed on non-payment to the supplier within 180 days, and 37A is the availment of ITC reversal on non-payment of tax by the supplier due to non-furnishing of GSTR 3B till 30th September of the following year. If the vendor has reported our invoice in GSTR 1 but has not has not furnished his GSTR 3B till September of the following year, then that ITC has to be reversed and then reclaimed whenever he files the GSTR 3B. So these types of ITC, the first one is re-availment on account of Rule 37, and second one is re-availment on account of Rule 37A. These reclaims will not be reported in 6A1. These reclaims will be reported in 6H of the table 6 of financial year 24-25. So, this is the question which we get the most, that what will happen if I am re-availing the ITC which is pertaining to financial year 23-24. So, we can divide this re-availment into two parts. One on account of Rule 37-37A, and second on account of other re-availments. Other re-availments includes the re-availment as per if we are following Circular 170. So other re-availment will be included in 6A1, and reclaim on account of Rule 37 and 37A, it will be included in Table 6H. It has also been clarified that if any ITC pertaining to preceding financial year 23-24 was claimed and reversed in preceding financial year 23-24 but reclaimed other than Rule 37 and 37A, like Circular number 170, in current financial year 24-25 till the specified time period, that is 30th November, then such reclaimed ITC to be reported in Table 6A1 of GSTR-9 for the financial year 24-25. It will not come in Table 6H of GSTR-9 of the financial year 24-25. Now, Table 6A2, it is the ITC which pertains to current financial year 24 and 25. It needs to be bifurcated between Table 6B to 6H. Uh, as ITC pertaining to preceding financial year has already been reported by us in Table 6A1, so it gets excluded from 6A2. Now, the bifurcation is to be given between Table 6B to 6H. 6B is the bifurcation of ITC availed for financial year 23-24 into inputs, input goods, and input services. 6C is the RCM ITC which we have availed on account of RCM payment of any unregistered vendor, that we have to bifurcate into input, input goods, and input services. And 6D is the RCM payment which we have done on account of supplies from any registered vendor. Then we have to report that ITC in 6D. Now 6E and 6F is the ITC availed on import of goods and services. 6G is the ITC on ISD credit. We must reconcile it with ISD credit appearing in GSTR 2B. Now 6H is the ITC availed in financial year 24-25, reversed and reclaimed in financial year 24-25. The ITC which we have availed in the GSTR 3B of financial year 24-25. So let's understand it with an example, that suppose I have ordered some goods from a vendor in the month of April. On 30th April, I ordered some goods. Now that good received was received by me in May, on 22nd of May 2024. So for the month of May, I must have not, for the month of April, I must have not recorded that invoice in my books. So when that invoice will appear in my GSTR 2B. Then following the circular number 170 by 02 by 2022, I will be reversing that ITC into in as a temporary reversal. So I have reversed that. I have availed that ITC in the month of April in 4A5, reversed it in 4B2, and then in of May I can reclaim it. So I have reclaimed that ITC. Now this type of reclaimed ITC will be reported in table 6H. Suppose I had not reclaimed the ITC in the month of May. Then uh, during the finalization my accounts, I got to know that this ITC against this invoice was not availed by me in the financial year 24-25. Then, because I have realized it within the due date, then I can claim it in the GSTR 3B of financial year 24 of financial year 25-26. And this ITC, when I will be reclaiming, this ITC is not to be shown in GST in table 6H of GSTR 9. Only that ITC which I have claimed in the financial year 24-25, reversed and then reclaimed in financial year 24-25, that ITC is to be reported in table 6H. We can also understand with the examples given in FAQs. Mr. A has claimed 100 rupees IGST in the month of April 2024 and reversed the same in October 2024 due to non-payment to the supplier within 180 days. That is as per Rule 37 of CGST Rule 2017. The same has been reclaimed in the month of March as payment has been made on 4th March 2025. So the reporting will be: original claim will be reported in table 6B of GSTR 9 for the financial year 24-25. Reversal will be reported in table 7A of GSTR 9 for the financial year 24-25, and reclaim will be reported in table 6H of GSTR 9 for the financial year 24-25. We have a second example also. Mr. A has claimed rupees 100 in the month of April 24 and reversed the same in April 24 due to non-receipts of good due to non-receipt of goods as per circular 170. The same was reclaimed in May 24. So they have firstly claimed the ITC in April 24, then reversed the ITC in April 24, and then reclaimed the ITC in May 24 as the good has been received on 4th May of 2024. How will be the reporting done? So reporting will be done as under original claim, table 6B, reversal of the same, table 7H, and reclaim in table 6H of GSTR 9 for the financial year 24-25. How the value of ITC will be reported: if ITC pertaining to financial year 24-25 has been claimed, reversed in financial year 24-25 and reclaimed in the financial year 25-26. So ITC was claimed and reversed in financial year 24-25. Claim should be reported in, so first claim will be reported in table number 6B. Reversal should be reported in table number 7, 7A to H, whatever the case is. And for the reclaim purpose, if there are two conditions: if the ITC is reversed because of other reason other than rule 37 and 37A, then such reclaim will be reported in table 13 of GSTR 9 for financial year 24-25 and table 6A1 of 9 for the financial year 25-26. It will not be reported in table 6H of the current year, because in table 6H we will report only those transactions for which we have once availed the ITC, reversed it, and then reclaimed it in the same financial year. If we are reclaiming it in the next financial year, then it will not be included in table 6H. If ITC was reclaimed in financial year 25-26 is because of the reason of rule 37 and 37A. Such reclaim will be reported in table 6H of GSTR 9 of financial year 25-26. It will not be reported in table 13 of GSTR-9 for the financial year 24-25. So we can we can distribute this reclaim into two parts. First one is on account of other than rule 3737A, and second one is on account of rule 37 and 37A. If it is on account other than rule 3737A, then the reporting will be as under. First one is table number 6B, second table number 7, and then third is table number 13, because we have availed this ITC in next financial year. But if it is on account of rule 3737A, then such reclaim will be reported in table 6H of next financial year, that is financial year 25-26, and it will not be reported in table 13 of GSTR-9 for financial year 24-25. I hope this is clear to all, and if anyone has any query, then you can please share your queries in the chat box.
Chat box is not enabled. It'll be in question answer link.
Yes, ma'am. Okay, so I have got the query. There is a difference between 2B and table 8A. So we will be discussing it subsequently. Do you have any question on table 6? So we can proceed further. We do not have any query on table number 6. So this is the table which we get in GSTR-9. Table number 6. 6A, the total amount of input tax credit availed through from GSTR-3B. In 6A1, we have to report the ITC which we have availed for preceding financial year. It will not include the ITC which we have availed on account of Rule 37 and 37A. That will be reported in Table 6H. Then A minus A1 is A2, that is the net ITC for financial year. In 6B, we have to classify the ITC of forward charge mechanism into input, capital goods, and input services. Then 6C, inward supplies received from unregistered person liable to reverse charge. That also we have to bifurcate into three parts. Then 6D, ITC on RCM from registered person, input, capital goods, and input services. Now 6E, we have to report the ITC on account of import of goods. F, import of services. G, ITC received from ISD. H, amount of ITC reclaimed. It will include, we can conclude that it will include only two things. First one, ITC which we have re-availed on account of Rule 37 and 37A, and second one, ITC which we had reversed, which pertains to financial year 24-25, which we have claimed, then reversed, and then again reclaimed. That will be shown in table number 6H. So the new reporting structure is gross ITC claimed in table 4A of GSTR-2B. It gets auto-populated in 6A. 6A1 is the ITC of previous financial year. It will exclude ITC reclaimed under section 3737A of the of invoices of previous year. 6A2 is 6A minus 6A1, and then we have to classify that ITC. 6 in table 6B, ITC of the current year claimed in the current year into capital goods and input services, and 6H ITC reclaimed in the current financial year. Report all genuine reclaims here, Rule 37, 37A, etc., and reclaim of temporary reversal. So we have few examples. Uh, ITC claim reverse and reclaim in 24-25. Mr. A has claimed rupees 100 in financial year 24-25 and reversed the same in 24-25. The same has been reclaimed in 24-25. So we have divided it in two parts. Reversal on account of Rule 37-37A. First claim will be shown in Table 6B, then reversal will be shown in table number 7A, and then reclaim will be shown in table number 6H. Now the second case is if it is on account other than rule 37-37A, then first claim will be in table 6B, reversal in 7H, and then reclaim in 6H. I hope this is clear to all. Now, ITC claimed and reversed in 24-25 and reclaimed in 25-26. Mr. A has claimed rupees 100 in financial year 24-25 and reversed the same in 24-25. The same has been reclaimed in 25-26. It also has two parts. If the reversal is on account of Rule 37-37A, then first claim will be in table number 6B and reversal will be in table number 7A. If reversal is on any other on account of any other reason, then first claim will be in table number 6B, reversal in 7H, and as we have availed this ITC in next financial year, so we have to report this ITC in table number 13, ITC of financial year availed in next financial year. Now, ITC claimed and reversed in 23-24 and reclaimed in 24-25. Now, there is a confusion that some people are saying that if we have reclaimed some ITC which is pertaining to financial year 23-24, then we should show that ITC or report that ITC in table number 6H, but that will not be the case. The case is that if we have once availed that ITC in table in GSTR 3B of financial year 23-24 and then reversed it. So that ITC and we are again reclaiming it in financial year 24-25. That ITC is to be shown in table number 6A1 only. It will not be shown in table number 6H. Only that ITC which we are re-availing on account of rule 37 and 37A, that ITC will be shown in table number 6H. Now we come to table number 7. Table number 7 is the segregation of reversals. Reversal on account of Rule 37, 37A, which we have discussed earlier. Rule 38, so the banking companies have an option in 17 in section 17.4 that they can avail this option of availing only 50% of the ITC. In this case, Rule 42 and 43 is not applicable to them. So most of the banking institutions opt for this option. So rule 38 is 50% is the reversal of 50% of ITC. Rule 39 ineligible ISD ITC. Rule 42 the reversal of inputs for exempt supplies, common inputs for exempt supplies, reversal of ITC on capital goods for common supplies, and section 17 subsection 5. We also have other reversals, temporary reversal, reclass of temporary reversal into permanent reversal, reversal of excess ITC availed, and statutory reversals. So this is the table we get in GSTR-9, wherein we have to report the reversals which we have done in the GSTR-3B for the financial year 24-25. Now, one point to note is that this table will not include any reversal made on account of ITC taken ITC pertaining to financial year 23-24. It will only include the reversals which we have done against the ITC claimed in respect of financial year 24-25. So we have to report the reversals here. Now, reversal type is Rule 37, non-payment to vendors within 180 days. ITC must be reversed along with interest. Rule 37A, non-compliant vendors, ITC auto reversal mandated. Reclaim when the supplier files as GSTR 3B. Rule 38, banking companies and NBFCs. Rule 42-43, common input and input services and capital goods. 17 subsection 5, blocked credits. Now, one thing which we have to remember is that we should always give proper bifurcation of the ITC in table 6. We can see the table number 6. Sometimes what our clients do is that if they do not have the bifurcation of the ITC, then they do not report the values here, or they report it in a single column. So while filing the GSTR-9, proper bifurcation of the ITC should be done, because recently there was a case that the client did not had the proper bifurcation of ITC, so he did not reported the figures here, and there was a difference in table number 6J, which was showing a negative balance. So the officer denied the ITC. He said that you are not eligible to claim the ITC because you have not reported it in table number 6. So it is advised, as many notices, got a lot of notices for this table, as this table was not reported correctly. Now, table number 8. The table number 8A of GSTR 9 is not the 2B of financial year 24-25, because it contains the ITC of invoices pertaining to financial year 24-25 with the date of financial year 24-25. Whether this ITC is appearing in GSTR 2B of financial year 24-25 or GSTR 2B of 25-26. That is the GSTR 2B which we got, which gets auto populated in April 2025 to October 2025. That those invoices also, if they have the date of financial year 24-25, that is included in table 8A now. So many of us have a question that table 8A is GSTR 2B, but no, it is not GSTR 2B for the financial year 24-25. It is the GSTR 2B of financial year 24-25 minus the invoices pertaining to financial year 23-24 plus the invoices dated between April 24 to March 25, uh, which are appearing in GSTR 2B of the financial year 25-26. So table 8A also includes the amendments made in the above invoices. Invoices of financial year 23-24 uh, in GSTR 2B will be excluded in GSTR table 8 in table 8A. Only table 6B will be auto linked with table 8A. Table 6A1 of the previous year ITC and table 6H, they will not be compared with table 8A. Only 6B will be compared with table 8A. So the intention is that the department wants the year specific ITC reconciliation. Therefore, now the table 8A has the ITC of invoices dated between April 24 to March 25, irrespective of the fact that they are appearing in GSTR 2B of the financial year 25-26. Now we have sample cases to understand the 8 logic. If the invoice date is March 24 and GSTR filing is in April 24, So this invoice will appear in GSTR 2B of April 24. The invoice date is for financial year 23-24 and it has not been amended. So it will not flow in table 8A of financial year 24-25. The logic is simple that the invoice date is for financial year 23-24. So it will not be a part of table 8A for financial year 24-25. Now the invoice date is April 24. GSTR-1 filing is April 24 and GSTR 2B period is also April 24. The invoice has not been amended. So in table 8A of financial year 24-25, this invoice get auto populated. Now the invoice date is March 25. GSTR-1 filing date is April 25. 2B period will also be April 25. So this invoice will also get, we will also get this invoice in table 8A of financial year 24-25. Invoice date is March 25, GSTR 1 filing is March 25 and 2B period is March 25. Amendment was done. So now in table 8A we will get this invoice in two sections. First one is B2B and then second one is B2BA. Suppose uh, while doing the reconciliation, I got to know that some of my vendors have not filed their GSTR-1 or they have not filed my invoice in their GSTR-1. So I followed up with them and then in financial year 25-26, they uploaded my invoices. Now these invoices will appear in GSTR-2B of financial year 25-26, but they will also appear in table 8A of financial year 24-25 as the date of the invoices are falling between April 24 to March 25. So this is table 8 of GSTR 9. ITC as per GSTR 2B. It is written that ITC as per 2B, but table 8A is different. I mean, it will include the ITC having, it will include the invoices which have invoice date between April 24 to March 25. Then it will be compared with table 6B, then we will get 6B and then we have to report the ITC which we have received during the financial year but availed in next financial year up to specified period, and then we will get the difference. So now the question is, what is to be reported in table 8C? If we are following circular number 170, then uh, the ITC which is appearing in GSTR 2B of financial year 24-25 that we have already availed and shown in table 6B, which invoice is not shown and which invoice is not reported by us in table 6B is the invoices which are appearing in the GSTR 2B of financial year 25-26. That is, if the invoice is uploaded by my supplier in their return of April 25, then that ITC I will show here because in table 6B that ITC would not be included. That ITC will be included in the table 8A which got auto populated here, but that ITC will not be included in table 6B because in table 6B we are only we are only reporting the ITC which we have once claimed in GSTR 3B. If anyone has any question regarding this, you may post your query in the chat box and I'll answer that query because there is a lot of confusion what to report in table 8C. So in table 8C, only that ITC which I will be first time claiming in GSTR 3B of financial year 25-26, that ITC is to be reported in table 8C. So I got a question. There is a difference between in GSTR 2B and table 8A. What to do in case our various case it is reflected. So I will answer now because table 8A contains the invoices which are also appearing in GSTR 2B of my financial year 25-26. If the invoice date is between April 24 to March 25, then only those invoices will be considered in table 8A, and all the invoices pertaining to financial year 23-24, even if they were appearing in my GSTR 2B, then also these invoices will not be considered in table 8A. Okay. So actually, I have opened the chat box. That is why my screen is not visible. Okay. So the next question is, Madam, if input of 24-25 not shown in GSTR 2B, uh, sir, you are requested to elaborate your question. Now, the third question is, how will we represent ITC related to 23-24, which was reclaimed in 24-25 and thereafter reversed again during financial year 24-25? So, sir, if you have if you have availed the reclaimed the ITC in 24-25 and then reversed it during 24-25 and also shown this reversal in your GSTR 9 of financial year 23-24, then the whole transaction will not be covered. Only the ITC which you have availed pertaining to financial year 23-24, you have to show it in table 6A1 of GSTR 9. Reversal will not be shown anywhere and reclaim will not be shown anywhere. Auto populated ITC in 8A is coming from 2A, not from 2B. Okay, so I have already answered this question. How about ITC reversed in financial year 24-25 and reclaimed in 25-26? So, and reclaimed the ITC in year 25-26, then I will do the reporting in the following manner. The first claim will be reported in table 6B. The reversal will be shown in table 7H, and reclaim will be shown in the table 6A1 of GSTR 9 for financial year 25-26, and in table number 13 of financial year 24-25. So yes, sir, I have got a question that there is no option for reversals made against the ITC of 23-24. So yes, we do not have any table to show the reversals pertaining to financial year 23-24. We will just be reporting the availment in table number 6A1, and reversals will not be shown anywhere. How about ITC reversed in 24 and reclaimed? Okay. So this is also answered. If any input of 24-25 not shown in 24-25 in GSTR 2B, sir, if it is within the specified period, then you can claim it. So I had got a question. If any input of 24-25 not shown in 24-25 in GSTR 2B and shown in 25-26, then we can always claim that ITC in GSTR 3B from the period April 25 to October 25, as the time limit is 30th of November. How about ITC reversed in financial year 24-25 and reclaimed in financial year 25-26, and such credit is ineligible credit. Ineligible credit is disclosed in financial year 25-26. So in this case, because we have once availed the ITC and then reversed it, so it will be shown in table number 6A1 and 7H, and then reclaimed it in financial year 25-26. So it will be shown in table number 13 of GSTR 9 of financial year 24-25. And then we have again reversed it. If we have shown it in table number 12, then there will be no treatment will be done in GSTR 9 of financial year 25-26. But if we have not shown the reversal in GSTR 9, then the reversal is to be reported in table number 7. So I think you currently have time. So you can show this whole transaction in GSTR 9 of 24-25. First availment in table 6B, reversal in 7, then then the subsequent claim in table number 13, and then subsequent reversal in table number 12 of GSTR 9. Which value should be taken in table 6B? So the first time claim is to be taken in whatever we are claiming in GSTR 3B. For the first time, that value is to be taken in table 6B. If the difference in table 6D is positive, is it necessary to write off or leave it? So sir, you can always write it off, as departments also want that whatever IGST you are left with, you should always permanently reverse it. If appearing in GSTR to be of financial year 24 but recorded in books and claimed in 25. Okay, so this was also I will address this question later. I have this in my PPT. Table 8D, impact, positive, negative difference and negative difference. I request you all to please elaborate the questions. In case input claimed in financial year 24-25 and again claimed in financial year 25-26, July 25, for the same invoice, same is reversed in October 25, then whether anything is to be shown in GSTR 9 table 8C of financial year 24-25. No sir, you do not need to show anything in this case, as this ITC is already claimed by you in financial year 24-25, and so it must be appearing in table 8A. So you do not need to do anything in table 8C. Madam, invoice in 24-25, material not received till 31/3/2025, also postponed in IMS and availed in June, both in IMS and books. But because of table 8A next year adjustment, I need to report in 8C, even though the same is totally not accounted in my books. Yes, sir, you need to report it in table 8C, because table 8A contains the invoices pertaining to financial year 24-25. So if I have and this invoice is also appearing in GSTR 2B of in my GSTR 2B of financial year 25-26. So I will have to report this invoice in table 8C, because I have availed the ITC in subsequent year. ITC claimed in 6A, then reversed in 7A, then reclaim. Okay, so I've already answered this question. ITC in table 8B is auto-populated from table 6B, which is ITC availed before reversal, which amount should be bifurcated in table 6 in input. So, sir, the first availment which you are doing is to be bifurcated in table number 6. Any reversals which we have done are to be shown in table 7 only. So, sir, you can get the recorded classes, I think. Uh, if any ineligible ITC is wrongly availed in 3B and neither reversed within financial year nor after the financial year is stipulated, how the same will be reflected in 9C, 9 and 9C annual returns. Sir, you can reverse this ITC in GSTR 9C using the DRC 03. So in table 6B, as I have already explained, in table number 6B, you have to give bifurcation of the ITC which you have claimed for the first time. Let me go to the table number 6B. So whatever ITC we have claimed for the first time in our GSTR 3B, the it is irrelevant whether we have temporarily reversed it or not. That ITC is to be bifurcated and classified in input capital goods and input services here. So whatever ITC I have claimed for the first time in GSTR 3B, that ITC is to be classified in table 6B. So I think I have answered most of the queries. Now let's start with, can we download the tables 8A in Excel? So the answer is yes. To facilitate the taxpayers, the amount which is getting auto populated in 8A online, we can get the Excel sheet also. And there will be some differences in table 8A Excel as well and the table 8A online which is appearing in my portal. So the differences will be on account of Excel will contain more invoices, that is it will contain the ITC which is ineligible, RCM ITC and amended ITC. It will contain all type of ITCs, but table 8A online will be the whatever will be auto populated in table 8A online will be only my eligible ITC. So the first instance is, suppose my vendor has reported his invoice under FCM in the month of April, and then in May he amended it to RCM. So this invoice will appear two times in my table 8 in my Excel sheet. First time in B2B as forward charge mechanism and second time as B2B amendment as reverse charge mechanism. So table 8A online will not consider this value. It will it will not consider this value while auto populating the details. It will contain only the eligible forward charge mechanism ITC. Now the second case is outward supplies reported as normal charge. Okay, this one I have already covered. And then then there is a case that firstly my the supplier and recipient are in two different states. So firstly, the supplier issued IGST bill and then he amended it to CGST and SGST of the state in which he was supplying the services. So this ITC becomes ineligible. Now these transactions will be considered two times in table in 8A Excel. First time it will appear in B2B and second time in B2B as eligible ITC and second time in B2B amendment as ineligible ITC. So if you are analyzing the table 8A online, then you have to consider these invoices. You have to deduct these invoices from the computations. Now these outward supplies amended from financial year 24-25 to 25-26, then it will appear in 8A Excel, but it will not appear in 8A online. Why it will not appear? Because the invoice date has been changed from financial year 24-25 to financial year 25-26. Outward supplies amended from financial year 25-26 to financial year 24-25. Then it will appear in 8A Excel B2BA amendment sheet, and it will appear in table 8A online also. It may be noted that 8A online is correctly populated, whereas there are some additional records which may be present in table 8A Excel on account of the above mentioned point. So we have discussed almost all the scenarios which we can uh, come across while analyzing the table 8A Excel. Any amendment in GSTR-1, 1A IFF, the auto population of 8A will be as per amended records, and you are also getting those amendments in the Excel sheet. So a few examples were given in the FAQs. Let's understand the examples. Invoice dated 30th 3 2025 was added in GSTR-1 for the month of April 25, as this was eligible record for financial year 24-25, hence appear in table 8A of GSTR-9. Now the supplier has amended the record in GSTR-1 for the month of May 25 and advancing the invoice date to 34 2025. After amending the date, now the document belongs to financial year 25-26, and therefore it will not be considered for table 8A online. Why it will not be considered? Because the invoice date has been changed by the supplier and he has changed it to financial year 25-26, so it will not be considered in table 8A online. Vice versa, if any invoice pertain to financial year 25-26, but later on the invoice date was preponed to financial year 24-25, then the record will be auto populated in table 8A Excel, and it will also be considered in online table 8A for GSTR 9 for financial year 24-25. Now, example 2, original invoice was added in GSTR-1 for January 25 with rupees 100 IGST, and subsequently supplier has amended the invoice to rupees 120 in Feb 25. After amending the value in table 8A online, the auto populated figure will be 120. But in GST in table 8A Excel, it will appear two times. First one in B2B section, and then second one B2B amendment section. So whenever you are analyzing the data of 8A Excel, then you must analyze the B2B A section carefully. Then only you will be able to reconcile the data of table 8A Excel and the values appearing online. Example 3, Mr. A is registered in Maharashtra and has issued invoice with IGST to Mr. B in Delhi in GSTR 1 for January 25. As this was eligible record for financial year 24-25, hence it will appear in table 8A of GSTR 9. Now, supplier has amended the place of supply as Maharashtra in GSTR 1 of Feb 2025, the case which we were talking about initially, and therefore the CGST and SGST is levied on the records. After amending the place of supply, the ITC becomes ineligible as the document belongs to 24-25. It will appear in 8A Excel B2B of Excel sheet as ITC eligibility yes, and B2BA section as ITC eligibility no. So this record will not appear in 8A online of GSTR-9 for the financial year 24-25, as the amended record is ineligible ITC. So it will not appear in table 8A online, but it will appear in table 8A Excel. So we have the third scenario. In what cases ITC shall be reported in 8C of GSTR-9? So I got a lot of queries on table 8C. So amount will be reported in table 8C only when the ITC pertaining to financial year 24-25, which is a part of 2B and auto populated in 8A, but which has not been claimed by recipient in financial year 24-25. Why it has not been claimed? Because it was not appearing in my 2B at that time. It it appeared in my 2B in financial year 25-26, then only I can first time claim it. So only those invoices which we have not availed in my GSTR 2B in financial year 24-25, those the ITC for those invoices will be reported in table 8C of GSTR 9. The supplies pertaining to financial year 24-25, however, supplier has not reported the corresponding invoices in any GSTR 1 file during 24-25 and reported the GSTR 1 furnished between April 25 to October 25. Hence, the recipient is availing the corresponding ITC first time in table 4A5 of GSTR 3B of next financial year till the specified time period. So, let's understand this with an example. While reconciling my data in August 25, I got to know that some of my suppliers have not shown my invoices in their GSTR 1. So I followed up with them, and then in August 25, they first time showed my invoices in their GSTR 1. So it will appear in my GSTR 2B in financial year 25-26. So for the first time, I will be availing that ITC in my GSTR 3B of 25-26. So ITC belonging to 24-25, which I have first time claimed in the GSTR 3B of 25-26, only that ITC is to be reported in table number 8C of financial year 24-25. We will also understand with an example. Mr. A has purchased the goods in the month of January 25. However, he has missed to claim the ITC in January 25. Now, in the month of May, ITC has been claimed in Table 4A5 of GSTR 3B. This ITC is pertaining to financial year 24-25 and which has been claimed for the first time in next year till the specified time period. So, it will be reported in Table 8C of Table 13 of and Table 13 of GSTR 9. Why are we reporting this in table 13? Because I am availing the ITC pertaining to financial year 24-25 in financial year 25-26. Mr. A has purchased the goods in the month of January 25. However, supplier has not reported this invoice in GSTR 1 for January 25. This invoice was added in GSTR 1 of April 25 by the supplier, which is filed on 11th May 2025. Recipient has claimed the ITC in GSTR 3B for April 25. This ITC is auto-populated in Table 80 of GSTR 9 for financial year 24-25. Why it is auto-populated? Because Table 80 contains all the invoices pertaining to financial year 24-25. So the ITC has been first time claimed in next financial year till this specified period. So it will be reported in table 8C and table 13 of GSTR 9 for the financial year 24-25. Now, table 8C versus table 13. 8C is the ITC on inward supplies other than the import and inward supplies liable to reverse charge but includes services received from SEZs received during the financial year. These services have been received during the financial year but availed in next financial year up to the specified period. So the invoices dated 24-25 but reported by the supplier in GSTR 1 of financial year 25-26 and claimed by us in financial year 25-26 are only those invoices are to be reported by us in table 8C. And in table number 13, all the invoices dated 24-25, irrespective of the period of GSTR 2B reporting, but ITC availed in 25-26. Table 13 will include 8C also and also the invoices which we have availed for the first time in 24-25, then temporarily reversed it and then again reclaimed it. So table 13 will include table 8C also. Now I'll be moving to the queries and then move on to the next topic. Suppose one invoice of financial year 23-24 was forgot to be reported in table 10 of 23-24 and will now during the current financial year 20 how to report this difference in last financial year, because it creates a difference in GSTR 9. uh, Sir, if you have reported this invoice in your GSTR 1, then you should report this invoice in GSTR 9 also. It doesn't matter if you have forgot to report that in table 10. You can definitely prepare a reconciliation and give it to the department if notice comes anytime. Input reversal done in financial year 24-25 related to 23-24. It got added in tax payable in GSTR in table 9 of GSTR 9, whether it is going to be reduced from table 9 of GSTR 9 financial year 24-25. Sir, the reversals are not for financial year 23-24 are not to be shown anywhere. So this will not be a part of table 9. Now, now the last thing is net ITC and GSTR 3B and GSTR 9 up to financial year 23-24. The net ITC as per GSTR 3B, that is table 4C, was equal to net ITC as per GSTR 9 table 7J. But from 24-25 onwards, net ITC as per GSTR 3B will not be equal to net ITC as per GSTR 9 7J. The reason behind it is that whatever ITC we have availed pertaining to previous financial year, we have already excluded it in table 6A1 of GSTR 9. So the 7J will contain only the ITC pertaining to financial year 24-25, which we have claimed in financial year 24-25. So this ITC, the ITC as per table 7J will not be equal to ITC as per table 4C of GSTR 3B. Now the intimation risk stemming from GSTR 9 and 9C reporting errors. So there are certain cases when we do some mistake or error while reporting the figures in GSTR 9, which may result into notices. So the first case is credit note B2B was not reported either in GSTR 1 in financial year 24-25 or financial year 25-26 up to the specified date. So now what the assessee has done, he has reported it in table 4I of GSTR 9 for the financial year 24-25. Since this reporting will result in mismatch in GSTR 1 and GSTR 9, so notices may come and you will have to prepare a detailed reason why there is a difference between GSTR 1 and GSTR 9. This credit note should not be shown in GSTR 9, it should be shown in GSTR 9C. I will show you the column when GSTR 9C screenshot comes, then I will show you where this credit note should be shown. Amendment in B2B and B2C pertaining to financial year 24-25 made during the financial year 24-25 in GSTR 1 but adjusted in table 4A and 4B of GSTR 9 instead of reporting in table 4K and 4L of GSTR 9 may result in issuance of notice. So if we have done any amendment in B2B and B2C in the subsequent financial year, then that amendment must be shown in table 4K and 4L. It must not be adjusted in table 4A and 4B as there will be difference between the figures. So the system generated notice may come to the client. Now case 3 is supplies made through ECO as per section 9(5). Restaurant services, supplies made through operators like Swiggy, Zomato, etc. Till Feb 2025, GSTR 1 did not include the values reported in table 14 of GSTR 1, which is liable to pay tax under section 9(5). So it was not included in our turnover. From March 25 onwards, total turnover of GSTR 1 also includes the supplies made through ECO, where ECO is liable to pay tax under section 9(5). Since our books turnover also includes the supplies made through ECO, and there is a specific table 5C1 in GSTR 9 for the same, the total turnover as per GSTR 1 and GSTR 9 will differ. So it may result in issuance of notice. So while filing our GSTR 9, we should report our total turnover, and there is a separate column given, table given in GSTR 9, wherein we have to show the supplies made through ECO in table 5C1. So we will report the whole figure. We will not try to match it with the GSTR 1. We will report the figures which we have recorded in our books, and it might result in difference. So we should always be ready with the reconciliations from GSTR 1 to GSTR 9 and to GSTR 2 books. Now, case 4 is reporting supplies to SEZ with payment of tax. Without payment of tax, supplies on tax is to be paid by recipient on RCM, and credit notes issued in respect of the same should be reported in the specified tables of GSTR 9. So what some of the clients do, they club the whole non-taxable or exempt supplies and report it in the tables. So we should always bifurcate the supplies which we have made to SEZ with payment of tax, without payment of tax, supplies on which tax is to be paid by the recipient. We should bifurcate the turnover and report it correctly in GSTR 9 if we had done wrong reporting in GSTR 1 or 3B. So the fifth case is tax on sale of fixed asset. Tax on sale of fixed asset is reported in table 4 of GSTR 9. So the case is that the tax on sale of fixed asset is reported by us in table 4 of GSTR 9. In 9C, they do not have any specific column. We can show it in any other adjustments not mentioned above, or we cannot show it. We can go with the difference and explain the difference in the table number 6. So, since GSTR 9C does not have any specific table for reporting tax liability on sale of fixed asset, in GSTR 9, same will be reported in table 4A and 4B, which will result in amount to be included in total turnover in table 5N. Turnover reported in table 5A of GSTR 9 do not include the amount, hence it will result in the difference in turnover. Proper explanation should be given by us in table number 6 if we are going with the difference, and if we are not going with the difference also, then also we should prepare a proper list of invoices against the sale of fixed asset, which officer can ask while verifying our data. So this is table number 5, and the credit notes which we have not shown in GSTR 1, that should be shown here. Credit notes accounted for in the audited annual financial statement but are not permissible in GST. Those credit notes should be shown here, not in GSTR 9. And the adjustments on account of sale of fixed asset, we can show it here, adjustment in turnover due to reason not listed above, or we can also go with the unreconciled turnover and always give an explanation in table number 6. Now we have case number 6, supplies pertaining to current financial year reported in the return in next financial year should be reported in table number 10 of the GSTR 9. So there was an invoice number ABC 123 dated 31/3/2025, which was reported by us in GSTR 1 of April 25. While filing the return for the March 2025, we forgot to report that invoice. Now we have reported it subsequently in GSTR 1 of April 2025, and tax was also paid in GSTR 3B of April 25. It should be reported in table 10 of GSTR 9. The important thing is there were some supplies which we had forgot to report in the GSTR 1 for financial year 24-25. Now we are showing it in the returns of financial year 25-26. So those supplies will be shown in table number 10, the taxable values, CGST and SGST or IGST, whatever the case is. And then we should also show it in table number 14. This payable figure gets auto populated from the table number 10 and 11, and we have to fill this paid column manually. So always remember to fill this paid column manually. If you will not fill it, then you might get notice against it that you have not paid the taxes, and you might get notice for recovery. Now you have to also keep it in your mind that if you are showing the supplies which you have reported in next financial year in table number 10, then it should not be included in table number 4 of GSTR 9. Now the case is, now we have another case. ITC pertaining to financial year 23-24 availed in financial year 24-25 and booked in financial year 24-25. So I got a question regarding it. Now I am addressing your question, that ITC was pertaining to financial year 23-24 and availed in financial year 24-25 and booked in financial year 24-25. For example, ITC amounting to rupees IGST 1500, CGST 1000, SGST 1000 pertaining to financial year 23-24 uh, was appearing in 2B of 23-24. We had at that time claimed it and reversed it, and now we are again availing it in financial year 24-25. So what will we do? As this invoice these invoices are booked in our books in financial year 24-25. So the FAQ has also addressed this question and clarified that this type of ITC which you have, although you have recorded in your books in financial year 24-25, but this ITC pertains to financial year 23-24 and is the dates of invoices are also 23-24, so they should be included in table 6A1, not in 6B, because this ITC pertains to financial year 23-24. As per the instructions issued by GSTIN in table 6A1, all the ITC pertaining to previous financial year in 23-24 should be reported, and in table 6B, ITC pertaining to financial year 24-25 should be reported. If the ITC pertaining to previous financial year but recorded in books in current financial year, then also it will be reported in table 6A1. ITC, if we report it in table 6B, then we might get a difference in table 8D, and it will also result in issuance of notice. Therefore, we have to report this in table 6A1 only. Because in if we will report it in table 6B, then then table 8 will compare this ITC with ITC of financial year 24-25, and it will create a difference, and it might lead to issuance of notice. If we have a negative amount appearing in table 8D, we will get notices. Now, case 8 is sometimes what our clients do, they reconcile the ITC on consolidated basis. That is, they add the values appearing in IGST, CGST, and SGST, and then compare it with values recorded in our books, IGST plus CGST plus SGST. So they do not find that the invoices which they have booked in books in CGST and SGST are appearing in 2B in IGST, and they end up claiming the ITC in the head CGST and SGST. So these types of mistakes should be avoided. We should always reconcile the ITC headwise and then claim the ITC in which head it is appearing in GSTR 2B. If the supplier has done the mistake, then we should tell them timely to amend that mistake. so that we are able to take the eligible credits. So this is the table 6 of GSTR 9. Now we will start with the Central Excise Amendment Bill. And so before starting this bill, let me give you a brief background why this act has been introduced, why this bill was introduced. So with the introduction of GST, with effect from 1st of July 2017, the Central Excise Act was subsumed in GST, and many of the goods were subsumed in GST. But there were certain entries which were specified in entry 84 of list 1 of 7th schedule to the Constitution of India. They were not subsumed. They were on these products, GST plus central excise plus cess, all were levied from July 17 till date. So, at the time of GST implementation, central excise duty rates on tobacco were substantially reduced to accommodate the levy of GST plus compensation cess without materially increasing the overall tax burden on the tobacco products. However, compensation cess on tobacco is temporary in nature, as it was intended to be discontinued once the liabilities relating to compensation to state, including the interest and loan obligation, are fully discharged. So, in anticipation of structural change, the government has proposed uh, changes in rates of excise duty to protect the overall tax incidence on tobacco products. Accordingly, Central Excise Amendment Bill 2025 has been introduced to substitute the tariff table contained in Section 4 of 4th Schedule of Central Excise Act 1944. So this bill was also passed by both the houses on 11th of December without any change. So this bill has now become an act, and it will be notified when this will come into force. Now, the objectives of amendments are, as per the statement of objects and reasons, the bill seeks to provide fiscal flexibility to central government to increase the central excise duty on tobacco and tobacco products, ensure revenue neutrality, protection of tax incidence post discontinuation of compensation cess, and update and substitute the entire tariff rate structure for tobacco and nicotine related products under the central excise law. So this amendment is prospective, and it will come in force on the date to be notified by the central government. Now, what is the scope of the amendment? There is no change proposed in the taxable event. So, excise duty is levied only at the manufacturing stage. So, this has not changed. Taxable event has not changed. Valuation provisions have not changed, and levy mechanism under Section 3 of Central Excise Act has not changed. Only amendments is only rate centering, and it is not structural. So the key changes in duty structure is, for unmanufactured tobacco, existing rate is 64%, proposed rate is 70%. Tobacco refuse, existing is 50%, proposed is 50%, proposed is 60%. Uniform upward revision across all categories of raw tobacco, irrespective of the end use. For cigars and cigarettes, significant rate escalation observed. For filter cigars less than 65 mm, existing rate is 440 per thousand, proposed rate is 3000 per thousand, 3000 per thousand. Filter cigarettes ranging between 65 mm to 70 mm, existing rate is 440 per thousand, and proposed rate is 5200 per thousand. Filter cigarettes ranging between 70 to 75 mm, 545 per thousand, proposed rate is 7000 per thousand. Other cigarettes 735 per thousand, and proposed rate is 11,000 per thousand. Cigars 12.5% or 4,006 rupees, proposed rate is 25% or 5,000. So these are the changes. As we all can see that the changes are only in rate. Nothing else has been introduced. No new exemptions are granted, and levy is same. The taxable event is same. Only the rates are proposed to be increased. For smoking mixture, existing rate is 60%. Proposed rate is 325%. Chewing tobacco, existing rate is 25%, proposed rate is 100%. Zarda, 100% is the existing rate and proposed rate is 100%. Hookah tobacco, 25% to 60%, proposed rate is 40%. Cut tobacco, 70 rupees 70 per kg, proposed rate is 10%. Ad valorem, other manufactured tobacco, existing rate is 25% and proposed rate is 125%. New age nicotine products containing tobacco 100%, other inhalation products 100%, and oral transdermal nicotine products rates to be notified. Now, what will be the implication of this bill? For tobacco manufacturers, increased cost of production likely impact the pricing, margin, and demand elasticity. And central excise duty will continue in addition to GST and compensation cess. Till the cess is withdrawn, input tax credit of excise duty not available in the GST. So it will increase the cascading impact. Reclassification disputes may intensify due to wide rate differentials. Transitional valuation and stock clearance issue may arise once notified. And this step is obviously in benefit of public health. So the conclusion is that Central Excise Amendment Bill marks a decisive shift in tobacco taxation policy by re-empowering the Central Excise as primary revenue tool in anticipation of the sunset of compensation cess. The amendment is comprehensive, rate intensive, and signal long-term intent to maintain high tax incidence on tobacco and nicotine products. So now I have completed the presentation. Now I will go to the question parts which in the chat box which you all have asked. So before starting the session, I got some questions. So let me go to those questions. Sir, I need clarity of reporting. One at table 4G tax liability under RCM and at table 6C 6D on ITC to be taken. Suppose taxpayer is liable to pay tax of rupees 1000 under RCM in current year. Then in the given situation, how much to report in the above table and whether any amount needed to be disclosed in table 1213. So, situation one is tax paid in current year 800, next year 200, ITC taken in current year 700, and next year it is 300. And situation two, tax wrongly paid in current year, ITC taken current year. So, in this situation, what you have to do, if you have paid 800 rupees in current financial year, then you will take and avail ITC of 700 rupees. Then you will show this is the tax paid in table number 4G amounting to rupees 800, and in ITC in table number 6 700, and then in table number 12 you will show 100 rupees. In table number 13 you will show 100 rupees because we are availing this ITC next financial year. Now, if in next year you are paying 300 rupees, you are paying 200 rupees and availing ITC of 300 rupees. So, you in next year GSTR 9, you will show the tax liability as rupees 200. In 6A1 you will show 100 rupees, and in 6C or 6D, whatever the situation is, you will show 200 rupees. Our dealer have not paid RCM. If we pay now during audit, can we get credit for the same? Yes, sir. You can always pay the RCM in GSTR 3B and get the credit. But just one thing, you have to pay the RCM liability along with interest. Input tax credit is wrongly claimed in 24-25. We want to reverse it. ITC, it must be paid through DRC 03, or we can reduce the input in next December of next return of December 2025. So it is advisable to reverse the ITC and show it in GSTR 9C. Now the reversals can be done through ITC as well as through cash. So it is advisable that you show this reversal in GSTR 9C. It will be helpful for you in the in case notice come. In case there is a notice that you have wrongly availed or availed the ineligible ITC, then you can always show that I have already reversed it during the annual return, and I have paid the liability through DRC 03. Is non-reporting of purchase association will trigger intimation? No, it will not trigger any intimation as the HSN on purchase is optional. I have one query regarding the preparation of GSTR 9. There are certain pending advances received against export of services which were reported in GSTR 1. The exports are without payment of tax under LUT. My question is, how should such advances which remain pending as on 31st 3 2025 and for which export invoices will be issued in next financial year be reported in GSTR 9? The system has auto-populated these advances in table 4F under the head advances on which tax has been paid but invoice has not been issued. Okay, not covered in. Since no tax is payable on these export advances under LUT, I seek your guidance on whether presentation in table 4AF is correct. So, sir, there was a notification number 66 by 2017, in which it was clarified that no tax on advance on service under LUT is to be in case you are exporting your exporting the services, then tax is not liable on the same. And if you have received any advance on such export, then you must not show it in advances table. But if you have reported it in GSTR 1, then you must correct it in while filing GSTR 9. So the solution is, you should delete this. You should not report anything in table 4F, that is advances on which tax has been paid but invoice has not been issued, as this head is only used for those advances against which we have paid the tax, and we will be issuing tax invoices, not the invoices on which tax is not applicable. So you should not show anything in table 4F, and it will be reported in GSTR 9 of financial year 25-26 when bills are issued. Until and unless bills are issued, it will not be shown in GSTR 9. So there will be, so the what you have to do, you will do two things. You will not show anything in table 4F, and you will also not include this amount in table number 5 until and unless you have issued bill against the same. Just do one thing, keep ready with you the LUT, the bills, so that whenever the notices come, you are able to tell the officer that these advances were received against the export of services. Hence I have not shown it in table number 4F. Query for table number 6B and 8C. I think it is clear now. Dear sir, as per new excise Central Excise Act, which form of tobacco is exempt from new excise law? So, no blanket exemption is given to any form of tobacco, and the new Central Excise, the bill has just revised the rates. It has not given any new exemptions to any form of tobacco. Dear sir, my clients are tobacco traders which buy and sell trading only. NATO tobacco, VAC tobacco, VFC tobacco, Burley tobacco refuse generated during graded process and threshold. So excise will not be applicable here, as excise is applicable only when manufacturing is done. So trading will not be covered under excise. Only if you are doing manufacturing, then only excise will be leviable on you. My client is engaged in sale of the following items. Are they liable to pay central excise as per the new act? As of now, there is no cess in these transactions. Sale of VFC tobacco purchased from tobacco brand and sale thereof with or without grading. Okay, so we are purchasing tobacco from tobacco board and sale, and we are selling it onwards. So this will not be manufacturing, as grading does not amount to manufacturing. So excise will not be applicable in this case. Sale of threshed VFC tobacco. So after reading the question, I understand that you are purchasing the threshed VFC tobacco and then selling it onwards. It will also be a trading activity. Please note there that in earlier there was an exemption, sale of scrap buds generated during threshing process. If you are purchasing threshed this scrap buds generated during threshing process, you are purchasing and just selling it, then excise would not be applicable. But if you are doing the threshing process yourself, then excise may be applicable if there is no specific exemption given. ITC of 23-24 deducted in GSTR 6 in 6A of GSTR 9. However, in 9C, same ITC was difference finally. Okay. So, this is a relevant question that we have deducted the ITC of 23-24 from in 6A of GSTR 9. Okay, so whatever ITC we have availed for financial year 23-24, we have reported it in 6A, and now that ITC is not a part of 7J. So while comparing the table number 12 of 9C, this difference will come. You just have to give a reason for this difference, that this ITC pertains to 23-24, and uh, we have availed this ITC in GSTR 3B within the specified period. So the difference has arose on this on the account of availment of ITC pertaining to financial year 23-24. If input erroneously claimed in GSTR 3B 24 as it was appearing in GSTR 2B, but it was not booked in our books. Okay, therefore reversed in financial year 24-25 through GSTR 3B. Then whether this negative figure of reversal to be shown in 8C. Sir, you will not show any negative figure. Actually, uh, this ITC was appearing in GSTR 2B. So this will also appear in table 8A, and table 8A will compare the values from table 6B. So there will be no difference. So you need to show this ITC in table 6B, and then when you have done the reversal, that is to be shown in table number 7. Earlier there was there as an exemption to tobacco products belong to chapter 2401. Sir, this bill has only this bill has not given any new exemption. So if any exemption was there, it must still be there, as no exemptions are withdrawn through this bill. IGST ITC of financial year 24-25 of export not reflected in 2B. Where to show such not reflected? Can we show ITC? This is not clear. Insightful session. Okay, thank you so much, sir. Thank you so much, ma'am. With this, we end our session. Am I audible? All the queries. So I would like to conclude the session, and thank you so much.
Thank you, ma'am, for providing such a